Okay, everyone, welcome. Just making sure the sound is working here. Perfect. Okay, I heard that come through. And let's just hit this, and that should work as well. It's a little bit both slanted and looking up. Let's make it a little like that and a little like that. All right, better. Okay. Okay. Confirm that's working so I can get out of there. Boom. Actually, it's just my iPhone. So I have a little app that I just plug my iPhone into my Mac Mini here and good to go. So, welcome. Thank you, everyone, for stopping by. Trying to get ready for next week, which is most certainly going to be an insane one. Again, if anyone is new here, essentially what we do on the weekends, we take an hour or two and go through all of the different equity markets and crypto markets and FX markets and everything that I look at. Try to figure out what's going to happen into next week. At the same time, just shoot the shit, ask questions, right? I always say that if I wanted to do this solo, then I would just do it solo. And also, this is a preview for what we do over at statsedgetrading.com, which is my website in which I do all of this work myself every single night and then upload the results into a nice little blog post with animated charts annotated charts and all of that. So if you're interested in that at all, link is in the description below. The same link, it actually gets you to my tools, which is everything that you'll see me use today, and affiliate links for those, and sometimes discount links to save you a few bucks. So check those out as well. So now that I got everything set up, let's just immediately get into it. I think I'm going to pop myself there is probably the best way to do it. And again, as I go, ask questions. When I'm done, my kind of standard routine here, I will go into chart requests at the end. So stick around for that. And then, if you got any questions, any charts or anything like that you want me to look after, certainly we'll do that near the end. So right off the bat, looking at Bitcoin, this one's been a bit of a choppy nightmare over the last few months. I took some trades in it, to be honest, nothing really to write home about. A bunch of, taking off small bits of profit when I get a move my favor and then stopping out break even, right? So, again, nothing I'm happy about. Sorry, just cleaning out some stuff. So when I take all these screenshots, it all looks pretty good. So here on Bitcoin, I think this 41,000 area still is the area that we have to pay very close attention to. It's been kind of chopping in and out a few times. If it happens anymore, then I think, it's going to be time to reassess, to say, hey, it's time to kind of move on, I guess, from it. But still, right, if you go back in the chart, it's even more pronounced, but resistance there, support there. Right, summarize my trading. I took a little short as it broke out of here, took a little bit of profits. I think I tried another little short as it broke down there, and then quickly got stopped out of that trade break even. I bought a little bit when it held above 41,000, got out of that for a little bit of profit and then break even, and then shorted a little more as we held under 41,000. Took a little bit of profit out there, and then this one may stop me break even. But as long as we are below 41,000, then I just don't think you can be long unless you're playing for just a short-term bounce. The next stop would be obviously this 30,000 or so. Above this, if we can get and hold above 41,000, I'll take another crack at it long. But until then, I really just don't see the need to get involved too much. I have some notes here that actually were the notes that I put on Friday, and I think they still hold, so I'll leave them there. And it's right now that Bitcoin is basically just acting as a risk-on asset. So what I mean as a risk asset. So what I mean by that is, people thought Bitcoin would be an inflation hedge. They thought Bitcoin would be a alternative currency to most things. But what it's proving to be more than anything is simply a risk asset. So if there is appetite for risk in the market, people so yeah, these assets, people are, if they're risk on and they want risk, you see crypto rise. If people are getting worried and they want to reduce risk, you see that crypto falls. So that's mainly how it's trading. Not like it matters. I'm just one that I pick my level, I pick my shot, and I take my shot there. Michael, you're not uploading these live streams to your YouTube channel. Sometimes I cannot watch. Yeah, they're all there. For sure. YouTube. Edge trading. Oh, I didn't tweet out that I was actually live. So hold on. I'm just going to do that real quick. Hopefully that doesn't cause some sort of weird feedback or anything. But yeah, if you go to the channel and then just go to videos, I try to, now that I've got Jess doing my thumbnails, you can see the thumbnail quality improved from back here when I was doing it myself to now when Jess is doing it. The red and the black, and also anything with a long timestamp is going to be my live stream, so you can check those out. So that was last week's, and then there's the weeks before, and so on and so forth. So that's going to be the color scheme we're going to stick with. Is the blue will be the midweek wrap up, the black and the red will be the live streams. So I just want to go to Twitter real quick and just let the people know. Trying to step up the YouTube game a little bit with better stuff as well. Bit F. Yeah, well, any crypto related company is going to, its price is going to mirror Bitcoin very closely. So if you're, and as someone who worked at a crypto miner for a few years there, or consulted with a crypto miner for a few years there, it just makes sense, right? The better crypto is doing, the more money that they will make. The worse crypto is doing, the less money they will make. So I would just say, if you're interested in a crypto miner, just understand that that's going to be pegged to the price of crypto, right? They're not going to do phenomenally well if crypto's in the toilet, and they'll do much better. Their job will be much easier if crypto is doing well. So again, just keep that in mind. Doesn't mean it's going to be a one-for-one relationship, but think about it like a gold miner, right? Is a gold miner going to make way more money when the price of gold is high or when the price of gold is low? And the same is with oil or any sort of other natural resources. It's a bit different with the scaling of the algorithm, but life is easier when crypto is higher and moving higher, because if they mine a coin and the price is still accelerating, then generally by the time they offset that risk, it goes from there. Plus, a lot of what I did a lot of when I was consulting with crypto mining companies was to try to analyze the charts and try to figure out where they should sell their holdings, because most of them don't want to hold the entire net worth of the company in crypto. But most of them, if you're a crypto miner, you're also probably a crypto believer, so they hold a large portion. So what I did a lot of, and this was 2018, 19-ish, would advise on And basically back then, my advice was during this rocket right here, my advice was just, sell all as it was breaking down here, was to get all of them. And they didn't listen. And that's why that company doesn't exist anymore. But so just know that you're still playing in the crypto game. So this is both good and bad. The good part of it is that any benefit you will get above crypto, the movement of the crypto within the security, is going to be due to whether the company is run competently. So it could be kind of a leverage play on crypto one way or the other. Also, there's some tax advantage for crypto as well. So I see your note there on gold. I'll get back to that once I'm done just going through. I just want to finish. So basically, my thoughts on Bitcoin is that under 41,000, you have to be short or in cash. Above 41,000, I think you need to start looking long. The benefit I'm noticing of crypto is its kind of decoupling nature to individual securities. So, for example, when I go through this crypto list, you'll see that even though crypto may be down, some of these securities are still doing pretty well. So, for example, Keep, I need to check my account. I doubt I was triggered in, but I actually had a standing order. I think it's 69 cents. Yeah, above this wick right here. I was looking for it, and you can see the notes that I just had here for the Stats Edge members. I put this on a few blog charts just watching this here. I may have been triggered in. This one's a bit thin and a liquid, so I had a stop limit, which is how I generally enter my crypto trades. I never use a stop market for entry because these things are just, you could be paying up. Well, this is up 40% today, so you could be paying up 30% on your coins if they get triggered through. So mainly just to show that there is a decoupling between these different coins. Oh, and I wanted to add, because I saw JC talking about it, I wanted to add Luna here. I don't want to use the Kraken version because the reason it's not on my list now is Kraken added it only recently. There we go. And the problem is when they add something like that recently, it doesn't pull in the back data. It's almost like they should grab the back data from another exchange that had the crypto in there longer. But I just wanted to push that in there. So Luna is interesting. It's had this already big pop up, so I'm not going to really mention it or put it in the blog post today. However, its relative strength is pretty evident in the crypto market, right? It had this big pullback, but it's held back better than most. So, if we're going to hold here, if we're going to chop around for a bit and then push higher, I do like Luna. No idea. Again, I know people ask me all the time. I have no idea what any of these do. I think Luna has something to do with one of those, buying digital real estate type things, which I don't get, but I don't care. If it's going up, I want to be in it. And if it's going down, I want to be out it or short it. And that's kind of the extent of my thinking of a lot of these things. So I'm just going through this list, just seeing if there's anything else interesting in the crypto space. It's actually been pretty quiet, considering, if it was trading almost like a security, I would imagine like all of the news with Russia and the SWIFT system and all of this would move it a lot, which is why I have that note on the chart, and it's why I have the theory about it being a risk asset, because it's acting like a risk asset. This engine coin, I'm still watching. It's kind of getting this declining wedge going on here after this big rounded bottom. So if this thing can continue, hold on, if I do that, I think it's easier to see my mouse. No, that. I think it's easier to see my mouse. Yeah, so this big rounded bottom, and then it's putting in this wedge type pattern. So if this continues, then and it bases around and then breaks out, I'm going to get involved in this one. I think this is a gaming coin or something, but just a little cup and handle going on. And I like orderly pullbacks like that as opposed to just blood in the street sell-offs. Ideally, what you'd want to find is something that's just holding strong with the pullback that we've had in the crypto market, but nothing really that I've been looking at other than Luna and Mana, right? There's Mana, which is Decentraland, which is another digital real estate type of a thing. So with Luna, I'm just going to remind everyone, I don't put this chart in every day, but around this 350 area. This is the anchored VWAP from the breakout. If I anchor a VWAP from the all-time highs, yeah, it's about the same area. And basically just it's hit this 350 area 3 times now, and it's had a bit of a hard time. So this downtrend line right here, if we can get above that, I think that's where I'll be interested. Again, looking at this one just because of the relative strength versus the other coins that we've seen, right? And that's just where I want to focus my time and attention. It's always, what are they not selling? Is what I ask myself every time I see a sell-off in the market. ADA, again, it was holding this $1 level. I took a couple trades above here. Around here, I still had the order out about, I think, 120, 115 or so. I was talking about it in the room with someone. So we do have a chat room, StatsEd Trading. It's not a signal service. I won't be in there all the time telling people what to trade. It's just not what I do, and I don't believe in it. But it is part of the service. If you're interested, link in the description below. I forget who I was talking. It's going to be too far back to look, but it just never triggered that stop limit. If it can get and hold above that area again, I'm interested. But so far, it is that support's broken, so it's no longer of interest to me. Ether's kind of interesting here where it's got its same level. It's about 3,000 in Ethereum, seems to be about the same as 41,000 in Bitcoin, where it's struggling to hold above it. If this breaks and we move lower, it doesn't look good for the entire crypto market. Yeah, the rest of these are down pretty much on the day. So really not much to add to the crypto space from my last couple posts, but nothing really happened. So there's nothing really to look at there. Now, when it comes to the US dollar, I've been noting this cup and handle here for a long time. In through here. So it'll be interesting to see what the open on I was going to say Monday, but actually tonight is for the dollar. But so far, just it's been fighting this base for a long time. Every time it breaks out of this base a little bit, I'm actually going to replace this with a zone, and we'll just call it right there. So as long as it's struggling to get out of this zone, it's like, what do you do? It's just in no man's land, which, for a currency isn't that uncommon because they don't really move significantly much. So Aussie Yen, I mentioned that I was looking for a breakout. I'm actually just add a note that I took some. And so I'm long some just Aussie Yen and essentially just looking for this as just a wedge here. So this $82 area has been an important level I've noted here for a long time. It was just kind of wedging around there. I think I took the breakout on this day, actually on Wednesday. And then Thursday and Friday, it's just kind of basing around. So my stop's under this downtrend line, just trying to see if I can get a pop out of that. I don't know what they call it, exotic pair or side pair. Yeah, the euro, I took this drop right here. So I am short a little bit of the euro. Again, I don't know how this will play out, but again, just a pattern trader, which I guess leads me to answer this. How do you think Russia threatening nuclear war will affect the market? I feel like huge down day tomorrow. Now, from just a personal humanitarian point of view, obviously what's going on over there is awful. I try to stay away from talking about it. If you follow my Twitter, my YouTube, you'll notice there's not much of that conversation that goes on. I try to keep, anything socially pointed, completely trading related. So talking about how I think this will affect the market, I believe it's already been that scare out has happened. We'll get into that when I go more into the market. The other thing is I'm not really too concerned with news when it comes to price action. And anybody who's a member of Stats Edge will tell you, I don't believe my saying that I repeat over and over again to anyone that will listen, that if you know the news, everyone else knows the news, and it's priced into the market. So that's my belief when it comes to the situation that's going on now as well. The question is always if is there anything out there that you think that the really big players in the market don't know? So the really big players being Goldman and Morgan, right? These Renaissance Capital, Citadel, these guys who pay people. Like, as soon as this started happening, Goldman went to one of the greatest minds in Middle Eastern and just European conflict out there, and are paying him, $100,000 a month to consult with them about what's going on and its effect on the market. So it's the reason I avoid thinking about those things entirely when it comes to trading, is just that I don't know as much. As I'm not a geopolitical expert, which is another reason why on Twitter and all these stuff I don't really bring up a lot of this, is because I don't know. So I'm just going to continue to do what I do as a chartered market technician and a quant trader, which is analyze the market from a price point of view and ignore everything else. Price will tell you. I know it kind of seems like a religion, but it is. And it's the reason I think that all of this is probably baked in is because when we gapped down after the invasion kicked off, the market just rallied for the next 2 days kind of intensely. I believe it's just one of those that the tensions were building long enough that this wasn't a shock event. Generally speaking, the events that they always say the bear market comes from where you least expect it. And I believe that's correct. So I don't think inflation is going to start a bear market, because people have known that's going to go on forever. And same with, I don't believe that this war is really going to be that massive deal unless something unexpected occurs, right? And the problem with trying to position yourself for something unexpected is, in its nature, it's unexpected. So, make your life easier, focus on price, shut everything else out. And speaking of, now that we're into the equity markets, I'm just going to take a look and just go back into this range. I got to replace this keyboard. So 450. 450 and 420 are areas to watch, right? So 420 is this low in here. That was also this low back here and this low back here. And again, if anyone's new here, these highlighted areas that I put in, this app is called TrendSpider. You can find it, link in the description below. These shaded areas right here and here are how I draw my horizontal resistance lines, because I don't like exact areas. It just never works out that way. That they're always kind of zones, right? So this is a zone of resistance right here, and this is a zone of support down here, and I believe these are kind of the major areas we need to look out for, and we're kind of smack dab in the middle of that. So that's just the note that I'm giving out here, that we're just kind of in a range. And then we had a question from Warren about gold, and since we're on the equity market, let's just go into that. Gold on coming back as an inflation hedge. See, I take issue with the comment of, and again, I will just I will die on this hill of ignore, who cares why. It's just try to, as a trader, try to get that out of your head for the reason that something will move. Because if it was an inflation hedge, wouldn't it have been going up the entire time that we've had this massive inflation for what, like 6 months or a year now? So what do I think of gold? I like the fact that it broke out here. This massive topping tail is definitely something that we have to watch out for. Again, this was the opposite to the that gap down that we saw in the market, in which everyone was going, okay, this massive gap up, this war is super, super bad. Again, there's an old saying that the dumb money opens the market, right? Amateurs open the market and professionals close it. So you had this big sell-off back down in at the same time the SPY was popping up. So I believe this move was just kind of an inverse to the SPY. So I don't think it has anything to do, again, so about reasons, you will never know the reason till after it happens. You just won't. And you won't even know then. You could have a guess. But my thoughts on gold is just, as long as it's under this topping tail, you have to be worried. If it chops sideways for a few days and starts to pop up, then maybe you can be interested in it. One trade that I am in from the trading room, here was the ideas behind it, which is a gold mining company with this SSRM, was we took a breakout in through here, this rounded bottom, and this broke out. It came from the Trade Ideas Strength algorithm. And that's been an amazing, amazing trade. I took a big chunk off as we kind of struggled with these highs, and then I'm still in a little bit of it. But again, the reason, I don't care. I'll say you don't know, and anyone who says they do know is not your friend, because they're lying to you. But basically, we had this consolidation that had been happening forever. We broke that consolidation, and that made for this big up move. What I would do is I'd say, if we start to break back down into this consolidation, that's where you just got to exit. For a long trade, if you go out on the weekly, it actually looks kind of interesting. You have this potential rounded bottom. It had been putting in these lower highs, right? So I've been putting in these lower highs here for like a year and a half, right? You can see every time it rallied, sellers came in at a lower and lower price. When that trend reversed is when you got the pop up. So, at the same time you were getting higher lows. So you're getting this tightening formation that was happening here. When that broke, that's when that big pop happened. The question now is the legitimacy of the breakout. And again, I don't care about inflation or war or anything like that. If inflation mattered, I think it would have rallied a long time ago. Right? If the war thing mattered, then why during the invasion did it pop off as well? So the possibilities, I think, are if you chop around here sideways and it pushes up, well, then it may be a real breakout of this big kind of wedge pattern. If it breaks down, then that and gets back into the pattern, then it was a false breakout. It may be time to look for a short. Now, what I will say is, instead of trading the actual gold, I generally prefer to do stuff like this, where I trade the the minings, and they're basically just like leveraged gold plays, so you can commit less capital to them and get the same kind of results. Same as we were talking about before with the Bitcoin miner. If gold increases, a gold miner is going to make more money, so then their price is going to increase as well. So they're going to be tethered to, but then kind of leveraged from as well. So anytime that I can make the same potential gain or the same potential loss, but commit less capital to it, that's always going to be the move for me. One thing that I noticed on Friday, so on Friday I was on Trader TV for the segment that I do there every Friday, and I kind of mentioned how ARK. Oh, no worries. I kind of mentioned how this ARK going on here, this pop that occurred in through here, was actually way stronger. So if we take a look at, let's actually just, Trade ID is a better tool for this. So we'll go daily, and then let's pop out properties, turn off symbol linking. Okay, so this bottom one is going to be ARK, and then this top one is going to be Berkby. And essentially I just use these Berkby as a value metric and ARK as a growth metric because that's just what they invest in. The rally first came from growth, and then the next day we had a big rally in value. So this is an interesting kind of take for me where if we were going to see a turn, I think we're going to see it in the growth side of things as well as the value. It's rare that you get an everything rally, I call it, where you have both sides of the market participating, especially in this market. And in this market, again, you both saw growth and value. Obviously, way more move on the value side of things when it came to Friday. So a lot of things, right? So for example, oil, I keep popping this up one up and I say, look at oil, just because XOP, it's holding tight to those highs. I know oil as an asset has gone up, but I think oil has this or XOP, which is oil and gas exploration and products. So what this ETF basically looks at is not just oil as a whole, but also looks at it's a basket of companies that make up that oil ETF. So, not just people who produce or pump oil, but also the people who explore for new wells and the people who create products around oils. So for me, I'm just looking to see if this can break out, and then I think it's going to be interesting to take a look at some of those other side of things. XME, which is our metals and mining ETF, is broken out and held. This is going to be both, it's going to have both to do. This is not just oil, but not just gold, but it's gold and a lot of your non-precious metals. So it's a combination of precious metals and non-precious metals. You can see that closing at highs, whereas gold has had that massive topping tail and ramp down. So this makes it interesting to me. So this, this closing right at the high there, that's interesting. So I'm going to take a look at the metals ETFs here. Not asking for financial advice. That's good because I'm just some asshole on the internet. So don't take my financial advice. Do you think Bitcoin has a chance to hit 100K? I don't know. Again, anyone who does that kind of prediction is, I don't know, it's being an asshole. Like they don't know. No one knows. And that's not how you should trade or invest anyway, right? So again, my thoughts on Bitcoin is if you're under 40 1,000. If you're long Bitcoin, you're long something in a downtrend, and you'll probably lose money, and you deserve it. If it's above 41,000, you can be long it. That's just the way I think about it, right? On a longer term point of view, if you're looking for a real long term view, I say you just mark these lows. If you're above this 30,000, then stay in. If you're, it has to break 60,000 to get to 100,000. So the way I look at trading is, why would I be involved in something that got cut in half? I'm going to wait for my spot to get in. My spot is 40,000. If I was a longer term trader and I was using like a weekly chart, I would say, I'd be in here, probably buying in here somewhere around in the 30s, and just know that I'm wrong if it breaks 30,000, right? But those long-term predictions, anyone who does that is just probably just being dishonest, to be perfectly honest. Like, how would they know that it's going to reach 100,000? Like, what metric are they using to value that? Same with the ramp up in gold. We had a ramp up in a lot of other commodities. So we had a ramp up in corn. We had a ramp up in wheat as well. And a lot of those did those same things. So I put this note in here for wheat right here. And then you had another 2-day run, and then it just came crashing back down. And it was the same with a lot of these things that, it's the buy the rumor, sell the news. Unfortunately, this news is war, but we're just seeing the same thing over and over again. Gold is ramping into the news, and then the news happens and it sells off. Wheat, corn, there's a couple other of these longer term kind of agriculture things. I guess you could probably look Moo, which Moo is an agriculture ETF. No, that's still doing okay. But a lot of the commodity names are having the same issue of buy the rumor. They get this big ramp up where people are basically worried about uncertainty, so they're buying hard assets. The event happens, and they crash back down. So I don't think that really shocks anyone. That's just kind of how trading, generally speaking, works. If you could trade off of news events, then everybody would be trading off of news events. The thing about trading off of news events is, we're all, as individual traders, informed compared to those other guys. We have less knowledge about what we're trading about. And when it comes to breaking news, you're fighting the machine learning, artificial intelligence that reads the news, makes a decision, and places a trade. And you're trying to say that you're both smarter and faster than that. So again, that's for me why I don't really look at that at all. You can try to position yourself for a news event you think may occur. Good luck, but that's something that's happening. That's something that some people do. But trading off of news, I've never met someone who's been successful in the long run for doing that. And I think this event is showing people a lot of that. Why, right? We had these ramp ups and then pullbacks as soon as the event occurred. And it was almost like it was suckering in people who, right, try to think they're geopolitical experts. And it's one of those, if you follow the statistics, which is why, right, the website's Stats Edge, so I always like to follow the statistics on stuff. Quite often, if you buy, there's another old saying that actually holds true in statistics. It's just buy when the cannons go off. And basically meaning that the lead up to war, you generally cause a lot of uncertainty in the market. When the war begins, you can generally buy a lot of these events and then have them go and move from there. And that's just what we're seeing. So, that's kind of my overall synopsis of the market, is that we're getting a bit of a revision down in commodities and a bit of a pop up in these more speculative assets. And I think a lot of that can be shown here. So actually, I need to get a scene that's just get my face out of the way, but I'll just push myself down here for now. So the this is basically the individual sectors that make up the S&P 500 and their performance throughout the week, right? So you had the big sell off in anticipation, and then you had the big bounce in reaction to the overall market, with most of the sectors leading higher. So the reason I look at this is to say, okay, well, what's leading us? So we have XLE, XLV, and XLU, which is real estate, healthcare, and utilities, right? Behind that, we have XLC, which is communications and energy. And then at the bottom, we have XLY, which is consumer discretionary. And again, consumer discretionary just meaning shit that people buy that they don't need. So what's pushing up this market, just by looking at these internals, is all of the quote unquote defensive sectors, right? So that's the note that, again, I'll just give. Again, every night I do the same kind of routine, and I summarize all my thought of the markets in these cute little notes. And then I do a nice little summary, 2 or 3 sentences at the bottom. Right, so the defensive sectors are holding the market. The more speculative sectors are the ones that are not doing as well, but again, everything's still doing great. Now, when it comes to economic numbers for tomorrow, there's nothing. Chicago PMI, I don't think that'll make a difference. So I would honestly say that this economic calendar next week has way less to do. Yeah, on Wednesday we don't even have. So I would say this economic calendar probably has way less. Will have way less movement of the market than anything. Everyone's focused on war right now. It's one of those things. I include the economic calendar when the economic calendar, I believe, is important. And I believe it is, when inflation was the thing that everyone was worried about, I would be very cautious with my own trading around inflationary numbers. When it comes to now, I just don't think any of that matters. LMT, overdone is my thought on LMT. And we had a nice push up in through here. Right? If you caught this break, I think you're in a pretty good position. I wouldn't be buying up here personally. Just kind of how I look at it, but again, teach their own. The break was great. If you're a longer term trader, again, that breakout was significant. You're only 5 or 6% above that. So it's not like it's super overextended, but for me, I would want to get it either basing sideways for a bit or down at this area. You're going to get a lot of, I think this stuff is going to be tricky stuff to trade because it's what new traders who don't know any better and think that they can see a news event and then place a trade are going to be battling the people in these stocks that know that doesn't exist. So you're going to get some issues here as well. And that is a perfect time now for chart requests, because what I'm going to do now is I'm going to clear out the list of anything that I no longer think is valid. So the list I'm going through here would be the list that the Stats Edge Pro members would have seen on Thursday night going into Friday. So we had FCX, that was great, but I wouldn't grab it here, so I've got to pull that off the list. We had RTX, and that worked great, but I wouldn't grab it here, so that comes off the list. DSEK, I still like the look of this one, so I'll keep it on the list, right? 11 and a half, 10, so just basically looking for this range to break. Dole, same kind of thing. I took some Dole right here, but it's still really close to 15, so I'll leave that on the list. EXPR, I've been in this one. I've only got 8 more days, so 2 weeks. I got to look to get out of that. STOK, I still like the look of this one. You only have another, 2 weeks till you have to get out. And then Twinkie, I'm in some. You only have 2 days, so I've got to take that off the list. So I'm going to move this to here. And then I'm going to take it off here. Just, I still like the look of the chart. And again, I'm in some. However, it you've got earnings in 2 days. So I've got to get out before then. And eat, I still like the look of this one. I am in this one as well. But I'm going to keep this on the list. So we only have 5 stocks on the list now. I generally keep my list to under 15. So we've got a lot of room to add. So where I do a lot of my analysis here in TrendSpider, my scanner of choice is over here. This is actually not only scanning, it's my alerting platform. It's where I run my algorithms through, automate it through interactive brokers, all of this. And this is Trade Ideas. Again, link in the description below. I'm actually I don't know why that's not expanding like that. Let me try this again. I use a virtual machine for this just to have it. You're going to be difficult, are you? Let's do it this way. It's not a virtual machine. It's a virtual private server. And the reason I do that is, again, I run some automated trading for day trading and swing trading, and all of that is managed within Trade Ideas. So I host that up on a cloud so that if my power goes out or if I'm traveling or something like that, everything still works as it should without me being there. I know, I'm being difficult. All right, there we go. This once. All right, so some of these, this is the TI Strength algorithm, which is an algorithm that I created that essentially just looks for the strongest stocks in the market, ones that are strong but not overextended. And then from that list, I like to take a look. I know this is going to be a hard scanning session for me to find stuff that I like to add to the list. And the reason for that is going to be the move. Again, if we go over to the SPY, is going to be the move over the last few days, right? The SPY from low to high has rallied 20 points. So I'm going to look at stuff and say, well, if it hasn't rallied 20 points, then why not? And, is it something that's underperforming the market? And I'm certainly not going to buy something that's just rallied 20 points, right? I just can't let myself. So I know it's going to be I'm going to have a difficult time. How would I break everything? So yeah, again, this is a time where I'll go and we'll go through and do chart requests and things like that. If you have anything you want me to take a look at, again, a lot of stuff is going to be overextended right now. And this is one of those things that it's just important that when you're trading that that there's times that are, times to buy stocks and there's times that it's time to wait. And I think we might be in one of those periods where it's going to be time to wait. Mostly. Hopefully, I can have a few names. Yeah, it doesn't look very interesting. So this is the bull flag scanner. So this is just, again, this is, as it says, just looking for bull flags, right? Stocks that push up and then push sideways. This DOCS is interesting. Let's go and let's look here. Now that was back there, okay, during that decline. So remove that. So this one's kind of interesting. So I'm going to add this back. I'm going to watch, 60, 54. when I look over here, what I'm doing is just adding it to this. All gets summarized. I'll show you guys around the website at the end here, but it's actually gonna remove. Leave them. Who cares? And where's my RSI? Right here. So basically, what I think about this one here is just a nice tightening pattern going on in through here after this big strong push up. So again, I don't need to know what the earnings said. I just know the market likes it. Right? We had a big push up after earnings, and now we're having this kind of sideways consolidation, getting very tight. Nice 2 days of action there, and not overextended like the rest of the market. So that's something that's interesting to me. So I'm going to put that one on watch for later for sure. IMCR, I'm a bag holder. Well, first of all, you're not a bag holder. Oh, and it's for 29. It's not that far, but this is an awful looking stock that's in a downtrend. Right, I wouldn't be holding this name, right? Personally, I hate the term bag holder. It just means you're someone that refuses to sell at a loss. And if you refuse to sell at a loss, at some point the market's going to take all of your money from you. Always think the best traders in the world and the best investors in the world, the Warren Buffetts and stuff out there, they're right like 50, 60% of the time. That's it. Right? So how they manage that risk is traders. If you're a trader, you have a stop loss. If you're an investor, you should still also have a stop loss. If you're just going to hold it forever, then what's the point, right? And if you're just going to hold it while you're in a loss and you have a plan to sell it when it gets to break even or a profit, again, that math doesn't work, and eventually all of your money will get taken from you. And that's not a probability, that's a certainty, right? If you continue to go that way, at some point it will certainly happen, right? It's, the sun rises in the east, and people who don't sell stocks or down in will eventually lose all their money, right? And, you just list all the companies. There's one of those things that a lot of people think, okay, it will eventually come back. It doesn't have to come back. There's tons of stocks that don't, right? Nortel and Enron and WorldCom and General Motors went bankrupt once, and Lehman Brothers and Bear Stearns and Countrywide Financial. There's just an endless list of companies that just never came back. So this is why I'm such a staunch of I don't buy stocks that are tanking, and I don't want to participate in. And I always have a stop. I always have a way out. I always know before I hit the button, I'm going to get out if this happens, and I always do it. And it's because, again, it doesn't have to come back. The market can and will take all of your money from you if you just I'm just going to buy stuff and hold it and whatever. Right now, again, if you're a long-term investor and you've got a diversified portfolio of 50 different names and you don't want to have a stop loss for each one, that's fine, but you should still have a point where you call uncle. And again, that should be priced into when you make the trade, right? If you're saying, listen, I'm going to hold stuff until it, drops 50%, that's fine. Again, you just need to know that and accept that risk, and then still have that plan to sell when it's down 50%. Oh, CME is interesting. Right, and it's just, again, it's one of those things, right? I will always be honest, and I know it sounds like I'm being an asshole at sometimes, but I would rather be an asshole, not get as much views as, right, someone who says, oh yeah, you just eventually just hold it and buy the dip and blah blah blah, you'll make money. And that those people will get way more followers and they'll make way more money from this side of their lives and all that kind of stuff. But for me, I'm going to tell it how it is, right? And people like it, great. I know a lot of people won't, but it's just one of those things, right? Where this is the market. Some things don't come back. If If you don't have a plan to get out, you'll lose money. If anyone tells you they're right all of the time, or they're right 90% of the time, they either have a really bad risk reward ratio or they're lying. There's the only two options. So you're not a bag holder. You just refuse to sell. CME is interesting. We were actually involved in CME as it broke out here. Had a nice little trade out of it, but had to get out because it had earnings. This yellow line on Trade Ideas, the most recent earnings date. And I just have a philosophy, unless I'm up really big on a name, I just don't hold through earnings. So then it's kind of sold off a bit. It tested that breakout point right here, and it recovered, and now it's holding here. So I'm going to add CME to the list as well, and I'm going to make that 240. And then the stop, I'd probably get out if it closed kind of back in that area. So 234. So we're going to add that one. Some names here that are interesting to me. Thanks, very valuable lesson. You can't trust all those analyst ratings. Worth between. Yeah, you certainly can't trust analyst ratings. I could go on a rant for hours about why you can't trust analyst ratings, but let's just say A, they don't have any skin in the game, so they can write down any number they want. B, it is unfavorable to actually say a stock is going to go down, because if they ever want to do business with that company in any respect, and they've said, hey, your stock sucks, people should short it, that's a conflict of interest that exists in every analyst, and it's you hear the story time and time again. B, they're just using fundamental analysis, which I generally don't believe in. But even if you do, sometimes the fundamentals can be right, but the price can take years to catch up, and it can never catch up, right? Like, are you going to tell me that back here on GameStop that fundamentals made a damn? And right, if you look at this and you say, yes, GameStop went from a $25 stock to a $500 stock to a $130 stock to a $300 stock in 2 months, fundamentals matter, then I think you gotta examine what you're doing in the market, right? So, and I don't care if you enter a trade because you like the company, because you like the fundamentals, because you think it's undervalued. I would say it matters very little the reason why you pick the stock. I think what matters way more is what's your plan after, right? You have to have a stop loss. You have to have a reason to exit that position. Because if you never exit a position, it doesn't matter. But no, I wouldn't trust an analyst as far as I could throw them. Again, they don't have any skin in the game. So what do they care? And if you look at when downgrades occur when the stock's selling off, and upgrades occur when the stock's rallying. Again, there has been exhaustive statistical studies done on, if you followed analyst, what your portfolio would look like. And you underperform the market and lose money every time. It's not they're close, sometimes they're right, sometimes they're wrong. It is they are wrong and you lose. Just period, right? So if you like the stock because you like the way the company does blah, 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 or whatever, and that's the way you want to trade, fine, have at it. Just know, if this happens, I'm going to get out, right? If I'm going to buy the stock at 30, I'm going to get out at 20, and I'm going to make sure that that difference between 30 and 20, I'm going to buy only enough shares that if my stop gets triggered, I'm fine with it, right? So, end of rant. SJT, I kind of like the look of over 7. I think kind of 650 you can get out. This is a real estate income trust. Actually got a pretty decent dividend. What's 12 divided by 7? Not that I care what dividends. Times 117, 2%. So 8% a year. that's why I don't care about dividends, but that's why I'm don't think it moves very much. But just getting tight in through here. Again, we have to trade the boring stuff that's not going to move very much, simply because this is just the market we're in, right? We can't buy Pelotons and have them just go insanely overvalued for absolutely no reason, because it's a bike with an iPad strapped to it, and a bunch of idiots think that that's going to change the world, right? It's just not that. That is not the game that we're in right now. We may be in it later, and I kind of hope we are, because for traders, that stuff's amazing. For the people who buy these things and just hold them as they crash down to oblivion, it's not so much fun. But if I can get 10% out of a name right now, I'm super happy. But this is a real boring name. This is a REIT, right? Is that what's... I think it's a REIT. I have no idea what that means. Engages in the provision of express trust services. No idea. Don't care. If it breaks out of that, I'll buy it. And if it doesn't, I won't. You'll notice a lot of these names are oil and gas type stocks, and I'm skipping over a lot of them, mainly just because I already have a few on the list. Like I put Suncor. I was ranting that. I don't know if I talked about it, but I put Suncor on there. Again, just a nice tight little flag up here at highs. If it breaks out, that could continue. That could continue up, and I'm just very cognizant to make sure that I'm just not, making a list of 15 energy names, because I might as well just buy an ETF at that point. So what's going on with this? The Metals Company. That's a funny name. Come on. Zoom in. Okay. Never mind. Potential little rounded bottom there in TMC. March 11th, so you get 2 weeks. I don't think it'll move very much, make that interesting. But for you rounded bottom people, that looks like there's one in there. Oh, that's why it wasn't zooming out, is because that's all the data there is. So it must have been a SPAC. You'll notice some companies will include the pre-SPAC data and some companies won't. So Trade Ideas doesn't include what it was before, because it usually just does a straight line at $10, right, and then starts trading when the deal's announced. TrendSpider keeps it, so sometimes I just switch over to see what's going on there. It's ABUS, a nice little bull flag, but it's down a little bit. It's just earnings is too close. So if you look right here, right, when they highlight that in yellow, or right up here, they actually, one thing that I love about Trade Ideas is it goes, hey, earnings are in 3 days. I just don't think that's enough time for me to make my risk reward. It's an interesting rounded bottom going on here. An ALDX. Over this it could go. I don't know. Okay, I'm already in. EXPR is still in here, so it's good to see stocks that you're in showing up on this this bull flag list, as opposed to them being taken off. Telephone apparatus manufacturing. What in the piss does that even mean? Provision of telecommunication platform services, focused on broadband access to the market. Again, just for curiosity. Who knows? This is a little bit too much of a slow mover to me, but nice looking bull flag that's pretty evident there. I love this scanner. It's, you know, if I had to pick a pattern, if someone said, hey, you know, gun to your head, what pattern can you trade for the rest of your days? It's got to be the bull flag. It's just, it's very simple in the fact that it's here's your risk, here's your reward. You know, you're trading in the direction of the trend. Snap on there is kind of interesting. Right. So what I like about it is, right, you got push up and then some sort of sideways consolidation. So you have some event that sparked a move higher, and then you have the market digesting. And again, I'm in the camp that I kind of am okay with the fact that my trading, I'll be right 50 to 60% of the time for the rest of my days, is that if this breaks, I know exactly where I'm wrong, right? So I focus almost exclusively on the risk management side of things. Um, and in this one, right, if Snap, you know, wants to come back up to here or so, you say, okay, if I get involved, there's my potential gain at the bottom of the gap, and there's my risk. So you just say, is this arrow significantly larger than that arrow? And it is. So I don't think I'm gonna, just because it's still in a pretty significant downtrend. I want a little bit more time in these things moving before I participate in those. Virtue Financial might have another kick in it. What a monster this has been. So I like the look of this. So kind of what I'm seeing here in Virtue is just this, right? Very typical bull flag. So above 35, it's interesting. And then I think, right, worst case, if it breaks, what, 33.50, that's where you got to say, okay, that bull flag failed. It's time to move out. So then again, in what I'm doing in my head, what I'm trying to, this is what I just try to keep going to, is that, so 30, 35 entry ish, 33.50 stop loss ish. So I'm risking $1.50. So then is there a chance that I think this could get to 38, which is $3? And yeah, that would just be another little push up from here. So if I can get, if I think it's likely I can get 2 to 1, then I can definitely get about 1.5 or so to 1. And if you can be 50% accurate with a 1.5 risk reward ratio and just repeat that for the rest of your life, you could be very, very happy. It's not sexy, right? You know, everyone wants to buy the thing and have it quintuple in price. I'm more about buying the thing and seeing if I can get, you know, if I'm risking 10%, can I get 15? If I can get 15, great. If I can get 20, I'm really happy. And then I'll take that money and I'll roll it into the next thing and repeat, repeat, repeat. All right, so we're almost done this list. And then I think I got 10 on the list now. And that probably is where I'll stop it. I don't think I'm going to hunt too much further. I've got one more scan I'm going to look at here. At the same time, if anybody has any chart requests or anything they want me to look at, now's certainly the time. This is just another strong stock pulling back scan that I'm playing with. ExxonMobil, interesting, more of a longer term bull flag here. Yeah, a lot of these are just energy, right? Exxon Mobil, and then we've got XLE, and then we got Schlumberger, and then we got, right, just a lot of, right, everything's an energy name. So energy name is still bull flagging. That might be the place to focus, I guess. I'll open up for chart requests a little bit longer. Again, I never know. I just rant. I never leave up the amount of people that are in because I don't know, it might make me sad if no one's watching, but that's fine. So as always, right, if there's chart requests, I'll take a look at them. If people don't mind hitting that like button, that'd be great. Again, YouTube sends me a email once a month that says get more people to like your stuff, and the algorithm will recommend it to more people. So, and I hate doing that like, comment, subscribe, blah 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 stuff, but you know, that's the algo. That's the world we live in. Okay, everyone. I don't see any additional questions there, so I'm going to wrap this up for a day. All I'll say as kind of closing comments with, the volatility and everything that's going on in the market is that you don't know more than people who study this kind of stuff for a living, right? So make sure that what you're doing is not trying to emulate those people, right? So you're not a global macroeconomic expert or a war aficionado or anything like that. You should stick to your plan, whatever that plan is. If you don't have a plan, then please, I say this all the time, please stop trading. Just stop. Right? If you don't have a plan and you're trading, you're gambling. And it will probably at some point end not so well. So all those guys are on Twitter, yeah. I like the little meme that I saw that was, is that old guy, the old smiley guy. It's like he's got the sad smile, and it's just like, I'm done being a vaccine expert. Now I'm going to be a global economic expert. But right, just trade your plan. Just stick with it. Understand that volatility is going to be a little higher now. So if you're uncomfortable, if you're kind of worried about what you're seeing in your plan, scale. What I do is when volatility increases is I scale back position size and or short my time horizon, right? So, a gain, say you're looking for a 10% gain on this fictitious stock we're making up. It's way more probable that you can get that in a very short period of time in a volatile market. So, maybe it's time to shorten your time horizon. The other thing is that, the stock that you may want to go up 10%, now that it's more volatile, has a chance to go up 15%, which means that you're probably risking more. So scale down, right? When things are scary, scale down, reduce your hold time, one of the other or both, right? For me, I will scalp part of my position way faster. I will take my trade. If it moves in my direction, maybe before, I would sell a third of that position at like 1R and then, try to get, sell another third at 2R and another third at 3R or something like that. Now it will be, I will sell 2/3 of my position at 1R and then try to get a little bit more on the other half. It's just the setups I trade, the stocks I look for, the looking for relative strength, all of this stuff remains exactly the same. What changes for me, again, is time horizon and position size. When things are calm, that's when you can trade bigger because your stop loss is smaller. When things are volatile, your stop loss is generally wider. So that's when you have to trade a little smaller. So that's kind of just my thought on that. Yeah, and that'll be it. Again, links in the description below for all the software you saw me use today. Also, come over to the website if you're interested. I do this analysis every single night on my own. I wrap it up into a neat little blog. I upload it. On top of that, you have access to all of the scans I use. We have a monthly webinar, actually, and to anyone here from Stats Edge Pro, I appreciate the compliment. Anyone from here of Stats Edge Pro, if you did not get your email with your invite to our monthly Q&A webinar, so this is a webinar that I do on for just the pro members. We sit down once a month. It can go up to 3 hours of they just pelt me with questions and I answer them kind of fully into the best of my ability. And I usually have some stuff that I'm working on in the background that I like to show off then as well. If you didn't get your invite, DM me on our Discord, which is kind of the last part of the service. We have a Discord. Again, it will never be. I started to trade to not have to commit myself to be somewhere at a certain time. So I will not just be there at a certain time. And I don't believe in signal services, so I won't be doing that either. But it's a place that we come and hang out. We talk trading, people ask questions, and I'll answer them, that kind of stuff. Again, so if you're interested, link in the description below. Anyone who did not get their Q&A invite, again, let me know. And I will talk to you guys soon. So stay safe, stay healthy out there.